Welcome to our Hong Kong Brief program. Today, we're diving into a mix of economic transformations, strategic business moves, and the ever-shifting sands of global investments, not to mention a peek into the realm of public health concerns. Starting off, China's economic landscape is undergoing a significant transformation, with a notable shift from traditional heavy industries towards renewable energy and advanced technology. Amidst this, PetroChina has emerged as a shining star, becoming the second-largest listed company in mainland China. However, not all is smooth sailing, as China Vanke faces challenges, highlighting the precarious position of the property sector in China's new economic order. Switching gears to business strategies that are reshaping industries, from Japan's booming logistics sector to Xiaomi's electrifying entry into the electric vehicle market, and companies' AI-powered endeavors in music streaming and data analysis. These stories illustrate how companies are leveraging innovation to stay ahead of the curve, setting the pace for growth and development in their respective industries. Lastly, we're touching on the global investment landscape and public health concerns. Investors are recalibrating their strategies amidst economic policies, geopolitical tensions, and market dynamics, with a notable shift from the Buy India, Sell China stocks trade. Meanwhile, the second-ever human case of bird flu in the U.S. has sparked concerns among experts about the potential for the H5N1 strain to spread between mammals, reminding us of the unpredictable nature of zoonotic diseases. So, there you have it, a whirlwind tour of today's most captivating stories, from economic shifts in China to strategic business moves and the intricacies of global investments and public health. Please stay tuned for more detailed content on these fascinating topics. In a world where the tides of economy and industry ebb and flow with the whims of innovation and demand, China's economic landscape is undergoing a significant transformation, as evidenced by recent reports from Bloomberg. The once booming iron ore sector, a cornerstone of China's rapid industrialization, is now witnessing a reset, with prices plummeting to around $100 a ton. This decline is not just a momentary blip but heralds a seismic shift towards a new economic paradigm, emphasizing renewable energy and advanced technology over traditional heavy industries. The ongoing property crisis, despite showing signs of abatement in other sectors, continues to cast a long shadow over iron ore, raising concerns about its future demand and price stability. Amidst these shifting sands, PetroChina has emerged as a beacon of success, defying the odds to become the second-largest listed company in mainland China, as reported by Bloomberg. With a market capitalization soaring to 1.76 trillion Chinese yuan, $244 billion, thanks to a nearly 42% gain this year, PetroChina has outshone the Industrial and Commercial Bank of China, ICBC. This remarkable ascent is fueled by a rally in oil prices and a resurgence in domestic demand, positioning PetroChina at the vanguard of China's evolving economic landscape. In a market fraught with volatility, Chinese companies doling out high dividends, like PetroChina, have captured the imagination and wallets of local investors, seeking safe havens amidst the uncertainty. However, not all is well in the realm of Chinese enterprises, as China Vanke, a leading property developer, finds itself in turbulent waters. For the first time, Wall Street brokerages, led by analysts at J.P. Morgan Chase, have slapped a sell rating on the company, signaling a grim outlook. The reasons are manifold, from mounting liquidity pressure to dwindling profits, compounded by the company's decision to forego dividends. This stark assessment sent Vanke shares tumbling by 12% to a record low in Hong Kong, underscoring the precarious position of the property sector in China's new economic order. These vignettes from Bloomberg paint a vivid picture of a nation at a crossroads, grappling with the challenges of transitioning towards a more sustainable and innovation-driven economy. From the decline of traditional industries like iron ore to the meteoric rise of companies like PetroChina, and the struggles faced by giants like China Vanke, the narrative is clear: change is the only constant. As China navigates these turbulent waters, the world watches with bated breath, waiting to see how the second-largest economy shapes the future of global commerce and industry. In a world where technology and logistics seamlessly intertwine, businesses are making strategic moves that are reshaping industries and consumer experiences alike. From the bustling ports of Japan to the electric vehicle market in China, companies are leveraging innovation and strategic acquisitions to stay ahead of the curve. Let's dive into some of the most captivating business maneuvers making headlines. Starting in Japan, Bloomberg reports a significant move in the logistics sector, where Hong Kong-based alternative asset manager, PAG, has made a bold acquisition. For a hefty sum of more than $400 million, PAG has purchased a logistics center from real estate developer Hines. This center, located in the heart of Japan near the port of Nagoya, encompasses two massive warehouses. One of these warehouses, constructed by Hines after acquiring the development site in 2022, sprawls over 2.3 million square feet across 4 floors. This transaction is not just about acquiring space, it's a testament to the booming logistics sector in Japan, which saw a 23% increase in transaction volume last year. The strategic location and the sheer size of these facilities highlight the growing demand for logistics solutions in the region. Meanwhile, in the electric vehicle (EV) sector, Xiaomi Corporation is making waves with its first foray into the market. Bloomberg shares the exciting news of Xiaomi's EV, the SU7, receiving a staggering 90,000 orders within the first 24 hours of sales. This surge of interest has sent Xiaomi shares soaring by 15%, with analysts predicting that the SU7 could rival Tesla's Model 3 as one of the best-selling premium EV sedans in China. With projections from Goldman Sachs analysts that orders for Xiaomi's EV may reach 100,000 this year, it's clear that Xiaomi is off to a racing start in the EV market. This early success is a promising sign for Xiaomi's ambitions to electrify the automotive industry. Crossing over to the intersection of technology and entertainment, Nikkei Asia reveals how KK Company Technologies, backed by Japan's telecom giant KDDI, is set to revolutionize the music streaming and data analysis landscape in Japan and Southeast Asia. As the powerhouse behind Taiwan's largest music streaming platform, KK Company is not resting on its laurels. Instead, it's harnessing its vast user database and multimedia industry knowledge to jumpstart AI-powered services in new markets. With an eye on expanding its enterprise-focused business, company's Blend Vision offers cutting-edge applications, including chatbots, AI analytics, and recommendation services. Already accounting for 45% of its revenue, company's enterprise segment is poised for significant growth as it taps into the burgeoning demand for AI services in Japan and Southeast Asia. These stories, spanning logistics, electric vehicles, and AI-powered services, illustrate the dynamic nature of today's business landscape. Companies like PAG, Xiaomi, and KK Company are not just adapting to changes, they're setting the pace, driving innovation, and opening new pathways for growth and development. As they navigate the challenges and opportunities of their respective industries, their strategic decisions are not just reshaping their futures, but also the experiences of consumers and businesses around the globe. In the ever-vibrant financial markets, Asian stocks were on the rise, as reported by Yahoo US, with traders keeping a keen eye on the dollar, which showed signs of firming. This shift in currency dynamics has kept the yen hovering near the 152 per dollar levels, sparking concerns about potential intervention. The anticipation that the Federal Reserve might be inching closer to a rate cut seemed to fade, painting a picture of cautious optimism among investors. Diving into the geopolitical sphere, the diplomat sheds light on China's multifaceted presence in Southeast Asia, as explored by Ens Han, an associate professor at the University of Hong Kong. Han's insights reveal a complex tapestry of Chinese influence in the region, extending far beyond official state initiatives. From expats and immigrants to private businesspeople and even organized criminals, a diverse array of non-state actors are actively shaping China-Southeast Asia relations. This fragmented, decentralized, and internationalized engagement challenges the conventional state-centric perspective, highlighting the significant role of Chinese migrants and the burgeoning consumer market in the region. However, the expansion of commercial agriculture to meet China's growing demand raises environmental concerns, while the rise of Chinese organized crime networks underscores the need for robust regional cooperation and law enforcement mechanisms. On a lighter note, the South China Morning Post brings us the inspiring story of British rugby player James Sawyer, who made a remarkable transition from being a fan in the stands to competing in the prestigious Cathay HSBC Hong Kong Sevens rugby tournament. After 7 years of enjoying the South Stand party atmosphere, Sawyer's passion for rugby led him to switch from the 15s code to 7s, a move that came after the 15A side national setup was cancelled in 2021 due to financial strains brought on by COVID-19. Despite the physical challenges of Sevens rugby, Sawyer has embraced the game with determination and is eager to showcase his skills on the international stage, hoping to help Hong Kong secure a spot in the World Series. These stories, spanning from the financial markets to geopolitical dynamics and the personal journey of a rugby player, illustrate the interconnectedness of global events and the diverse ways in which individuals and nations navigate the complexities of the modern world. Whether it's the subtle shifts in currency values, the intricate web of Chinese influence in Southeast Asia, or the determination of an athlete to achieve his dreams, each narrative offers a unique perspective on the challenges and opportunities that define our times. In the ever-evolving landscape of global investments, a notable shift is occurring as investors are beginning to unwind the once popular "Buy India, Sell China" stocks trade. As reported by Bloomberg, this change in strategy is largely driven by Beijing's supportive measures for its economy, which have led to a resurgence in industrial profit and manufacturing activities. Firms such as Lazard Asset Management, Manulife Investment Management, and Candriam Belgium are leading the charge, reducing their exposure to India due to concerns over stretched valuations and regulatory cautions about market froth. While India continues to be viewed as a crucial investment destination for the next decade, the narrative is shifting towards China's policy support potentially being sufficient to rejuvenate growth. Meanwhile, tensions in the Middle East are escalating, according to the Financial Times. Iran has leveled accusations against Israel for an airstrike on its embassy in Damascus, which resulted in the death of 3 senior members of the Revolutionary Guards. This incident significantly heightens the hostilities that have been simmering since Hamas's attack on Israel in October. The aftermath has seen Iran's proxies engaging in skirmishes with Israel and launching attacks on U.S. forces and bases across the Middle East. Despite these developments, Iran is reportedly seeking to de-escalate tensions with Washington, with indirect talks between senior U.S. and Iranian officials taking place in January. Amid these geopolitical uncertainties, investment strategies are also evolving in the realm of technology stocks. Bloomberg highlights how PIMCO's quantitative fund is shifting its focus towards investing in the tech sector, particularly targeting undervalued giants like Alibaba and Tencent. Chris Brightman, the CIO of Research Affiliates, points out that the valuations of these internet platform companies have plummeted to historical lows due to regulatory crackdowns and fierce competition. Despite the apparent risks associated with investing in Chinese stocks, Brightman is optimistic, viewing the current valuations as offering attractive compensation for the significant geopolitical risks involved. These developments paint a picture of a global investment landscape in flux, with investors recalibrating their strategies in response to economic policies, geopolitical tensions, and market dynamics. The shift from India to China, the rising tensions in the Middle East, and the renewed interest in tech stocks underscore the complexity and interconnectedness of global markets. As investors navigate these turbulent waters, the ability to adapt and respond to changing circumstances will be crucial in seizing opportunities and mitigating risks. In a move that has caught the eyes of global financial markets, Chinese President Xi Jinping has hinted at a major shift in the country's monetary policy, as reported by Bloomberg. Xi has called for the People's Bank of China, PBOC, to gradually increase the buying and selling of government bonds in its open market operations. This suggestion is stirring up conversations among traders and economists alike, with some interpreting it as China inching closer to strategies akin to those of the Federal Reserve in the United States. While the idea of quantitative easing looms in the backdrop of these discussions, there's a consensus that these remarks signify an intention to use additional tools for ensuring liquidity and stable interest rates, rather than signaling a revolutionary policy overhaul. On a different note, the South China Morning Post brings to light a concerning development in the realm of public health. The United States has recorded its second-ever human case of bird flu, with the infected individual having been exposed to dairy cattle. This rare occurrence has raised eyebrows and sparked concerns among experts about the potential for the H5N1 strain of bird flu to spread between mammals. Despite the individual's recovery and ongoing treatment with antiviral drugs, the increasing instances of mammals being infected by this strain are worrisome. Authorities, including the U.S. Department of Agriculture, the Centers for Disease Control, and the Food and Drug Administration, have reassured the public that the risk remains low. This case, described as the first of its kind involving dairy cattle by the American Veterinary Medical Association, underscores the unpredictable nature of zoonotic diseases and the continuous vigilance required to safeguard public health. These stories, spanning from the intricacies of monetary policy shifts in China to the cautious stance of global financial markets and the health scare posed by the bird flu case in the U.S., illustrate the interconnectedness of our world. Whether it's the economic decisions made in the halls of power in Beijing or the health alerts issued in the U.S., these events remind us of the delicate balance that governs global stability and the importance of staying informed and prepared for the unexpected. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.